Euro Aussie finally turning around for me. So yeah, you can see it came up to 170, finally rejected a few times, now is breaking lower, hitting this 167.5 level here, and seems to be eventually going to break it. If we drop it down to a 4 hour, we get a better look at this. So you can see I hit this zone a couple times, 3 times here, pulled back up, created this upper liquidity zone here on the 4 hour chart, which is quite a bit below this one. Can delete this because it's not relevant anymore. And so yeah, now we're looking to break this area, which will eventually break this 1675 area. So delete this, we'll delete this for now. Can actually, all these wicks kind of fit right into this zone. This is kind of the new zone here. Major area that price needs to break before it heads lower. It'll be touching this moving average soon enough, probably by the end of the week, as long as this continues down, which I think it will. I think all the euro pairs are selling off now, which is good. I'm not certain that this is essentially bearish, but it does seem to be selling off, and it makes sense because it moved so much already this month. So it could be just selling off for the month, but with these big bear candles here, I think it might be definitely heading lower, so into next month. So what we can figure out here is where it might be headed next month. So we're going to look at how, and obviously we're not going to know this until things start closing, but how this monthly candle closes. If it closes below this zone here, you can see wick, and this is what I talked about before. So obviously this candle's most likely going to still close pretty bullish, in bullish engulfing versus last month. So, but I mean, this is a huge area of liquidity. So if it can't break this area and it closes below it to end of the month, closes below 166.50 kind of thing to end the month, then I guess it's still got 3-4 days, but about 3 days, I think, 3 trading days including today. So it's got 3 days including today to close below 166.50 ish. So, and if it does that, then even if it closes within this zone, like, it actually doesn't have to close, it only really has to close below 167.80, which is not far away. It's only 35 pips away. So that's on the monthly, and that's that's 3 days left including today. So, but it's got these big areas it's gonna have to break, and I think it will. I think it definitely will. Just got to give it a little bit of time. I'll delete this zone for now because I don't think it's useful for us. Our monthly range for Euro Aussie here is still 600 pips, 608, and it did 712 already this month. So obviously it's burnt out. It's going to sell off a bit. So still shooting for 600 pips next month. So, but what we're going to do is tighten these up. So I'm going to base my theory on this being bearish next month and looking for sells. So I'll put this to, we'll find some whole numbers here. We'll say 169 is going to be next month's high, and then if it moves 600 pips, which is pretty conservative, that would put us at 163 for next month being the low. Move this over here, just adjust it again here, just so we know what we're looking at. I like clean, even lines. It makes things really easy for me to look at, and it's aesthetically pleasing, and it's easy to follow. So that's important when it comes to trading, is you want easy charts to follow. So yeah, big bearish, just going over this little bit of overview, hit this 170, two big bear candles pushing us. We never seen anything like these candles, until like way back here, back in July. So really shows us this is turning around. Yes, it is rejecting this zone a little bit, but you can see it is closing lower and lower, and actually these wicks are going lower. This one's lower than these two, so it does tell me this wants to head down. So I'm not one to really consider. So there's a few things. Normally, like you could take a trade off of this zone, but to me that's a bad trade. And the reason is because price is still super bullish. It's way above the daily average, the daily moving average, like way above. It's still way above the 4 hour moving average, and it is below the 1 hour, that's a one good sign. And it is creating lower lows and lower highs. So the bear structure is a little bit there on the 1 hour time frame, but that's not enough for me to take this trade. I think it could still push up through this zone, and I don't want to get stopped out, and I don't want to trade that much against the grain right now. I want to wait for this to break this zone here and then maybe consider. So if it broke this zone and ideally was below this 4-hour moving average, which I don't know if it will be, but we'll see. It just depends how long it takes for it to break this zone. But something like this. So then I would enter the trade based on something like this. And again, this will probably be a next month thing. And so what we'll do is we'll just move this over. This is actually a perfect setup if we just wait it out. And price actually, you know, does what I think it will do and what I hope it does. So you got a couple things here, and you basically bid these liquidity zones against each other. So you let price break this liquidity zone and then retest it a little bit, and then you set your stop to the above this one, which is quite a ways away, and I don't really like that the stop is 135 pips. I mean, that's quite a bit. So I might have to adjust that when the time comes, when the time comes, and you can kind of figure out other liquidity zones. But let's just say, theoretically, this is a bang on trade. So if price breaks this area and retests and holds, you set your stop to above this previous liquidity area. So now we have this liquidity area and this one protecting us, and then you target all the way down. So you target the full monthly range, which actually aligns with all these wicks as well. So that's good. So just without even looking at any like details, without looking at and really evaluating this trade. I mean, this is obviously like weeks early. So, but looking at like just going off of what we know right now and super early, how I look at this trade is you get a 3 over, between a 3 and a 4 risk to reward. So you're tripling your money. It's highly probable once this breaks this zone, and ideally breaks it below this moving average, and then it still is below the 1 hour moving average. You can see, let's say it sets up, if price continues down here, it's creating more lows, more lower lows, and more lower highs. So that super favors us. So if price is below the 4 hour, the 1 hour, the 30-minute moving average, it breaks these two zones. And then let's just say price, let's say we take a sell. Let's say price comes down, breaks the zone, comes back up to here. We take our sell position here. Let's say price pushes back up, blows through our zone here. We still have this other liquidity safety zone to save us. So let's say price blows through this zone and makes it to like right here before heading down. Then, I mean, we're still good to go, right? And if everything still sets up, our moving averages catch up, it starts putting in lower lows and lower highs again. All we do is we stack our positions. So we got this one stacked, and then we'll just take another one down here. We'll move this one to break even once price comes back down, and then we'll just take another one, and we can actually set our, let's say price comes up, starts creating a bunch of wicks here. This is our new liquidity zone. So for our second trade here for the month, we go like this, and then obviously we just stretch this all the way down, have the same take profit, and now you have 2 trades for the price of one. One's break even, so that one's your safe. You're still looking for a 3 to 4 risk to reward, and it's super safe because you have liquidity zones protecting it. So I mean, that's kind of, I went through that really quickly, but and if you're interested in how I trade and becoming profitable trader, just join my WhatsApp group. I can help you through everything. I can help you break this exact same scenario down much slower in detail, especially as it comes to play out. But these are what I look for, and I look for them ahead of time so that I'm ready and I can set my alerts, and I never just sit down at my desk and decide I'm going to take a trade today. I let everything play out. I mark everything up prior, and I let price come to me, and I don't take trades I don't want to take, and I don't take trades that are low probability, and I don't take trades that don't have good risk to reward. So if there's not at least a 3, I'm not taking it. I'll just sit. Like I'd rather make no money than lose money. So and when it's time to trade, it's time to trade, and then that's the time you make money. So that's my Euro Aussie setup. If you guys are interested, join my WhatsApp group. It's the first link in description. I'm very active there, even when I'm on vacation, which is coming up soon. And I can help you guys, through your trading journey, because I know it's really difficult. I've done this for 8 years, and it's really difficult by yourself. It's really difficult with bad information, which there's a lot out there. But anyways, I'm not going to go into that. That is my take on Euro Aussie. Looking for it to break this level here, and looking forward to this movement next month and jumping in on this position here. So let me know what you guys think in the comments, and I'll see you in the next one.